In a world where so many stocks are absolutely going to the moon, and I'm lucky to own a few of them, I still get drawn to stocks that are going the other direction in a bull market, especially when they're attached to really good businesses. I've got one of those stocks I want to talk about right now that I think the market is absolutely missing out on, and investors may want to consider buying. I'm Jason Hall. This is Investing Unscripted. That stock is Lululemon. We're going to talk about why I think it's compelling and what I think investors are missing out on right now. Before we get to that, though, this video is sponsored by the Motley Fool. Got a great stock to talk about and what I think is a great investing idea that's very timely, but the Motley Fool can get you even more. We have a great partnership. We get to make these videos because of our partnership with the Fool. They have a long track record of success. And if you're looking for more great stock ideas, go to our special link. It's fool.com/unscripted. Go check out fool.com/unscripted. Sign up and you can get access to the Motley Fool's 10 best stocks to buy right now. Every month, you're going to get access to some great new stock ideas, can help supercharge your portfolio. All right, let's get into it. Lululemon is one of those amazing stories, one of those amazing brand creation growth stories. And if you look at from the company's IPO through its rise up, at one point, this was a 30 bagger plus. Now, of course, the stock has fallen a tremendous amount from the high. It's down almost 70% from the highs reached about 2 years ago. The thing is, even with that big sell-off, investors that have held Lululemon stock for the long term are still earning huge market-beating long-term returns of about 14.5%. More recently, it has definitely been a painful stock to own over the past few years. All right, so what's going on with Lululemon's business? In short, there's a lot of worry that the company's lost its edge, losing its moat, losing its brand cachet. There's massive amounts of other brands that are compelling to shoppers looking for the athleisure aesthetic and also looking for really high quality clothes. And that's something that Lululemon has, but it does look like it certainly has some real competition there. And if you look at the stock, you would think that its competitors are just absolutely eating its lunch. And it's certainly true that the business is feeling some competitive pressure right now. If we take a look at the second quarter results, this was from back in September, total revenue was up. China, really strong growth. You look in the rest of the world, really strong growth there too, but it's that America's business that's struggling. Revenue was up 1%. Here's the thing, they opened some new stores, same store sales down 4%. In other words, less sales coming out of every existing store that the company already had open. And all of its growth in the Americas was the result of opening new locations. And I can tell you this, the market hates seeing comps shrinking, and that's what sent the stock down a tremendous amount. You would like to see revenue growing by at least inflation. We're seeing things going the other direction. That's got the market really, really concerned. Am I concerned? I don't know that I would say I'm concerned, but I think it's obvious that management has some work to do to right the ship and make sure the focus on their brand is still there and continue to cultivate customers that are looking to pay a premium for a premium product and feel like they're getting the value for the cost that they're paying, while also being willing to pay a premium for the product. And we do see that that seems like it's slipped. But with that said, let's start pulling back the curtain a little bit and talk about some numbers. So let's do a couple things here. Let's just start with revenue. Total revenue continues to grow. International sales make up about 30% of total revenues, and those are growing at double-digit rates. So even though there's weakness we're seeing in the Americas, that core markets, mostly the US, if we're honest, Lululemon's a Canadian company. Most of their business happens in the US. The vast majority of their revenues, 70%, are in the Americas. That means that it should be able to continue to leverage its growing cachet and presence outside of North America and continue growing the business overall. Now, I also want to talk about cash flows, something that's really important for a business. Here's the cash flow picture. Again, we can see it has certainly started to come down. The company is adding additional cost, and it is weighing on the business, the investments that it's making in its business. But this is still an absolute cash cow business. Let's look at cash from operations, because that's another really good metric to look at. And we see that metric, again, still super healthy. It has come down about $500 million from the peak back in 2024, but the company still continues to pump out cash. I want to look at a couple of other metrics here that I think are really important. Let's talk about margins. We can look at gross margin. This is the margin dollars left over after covering cost of goods sold, the cost to manufacture its product, get its products into retail, and then the revenue that it collects minus those costs. 59%. They're actually near some of the highest levels ever. Let's look at operating margin. That's another one. This starts to factor in, again, operating expenses, not everything, 23%. This is a very super high quality, high margin business still. So there are some signs of struggle. We know that. But again, the company's still holding really good margins, holding really good cash flows, generating tons of money, giving it the resources to continue to focus on the business. Now, let's talk about the valuation story here, because this is to me what makes this a super compelling opportunity right now. If we looked at price to free cash flow, about 17 times, and 11 times price to earnings. Yes, company has work to do. Is it possible that their earnings continue to see pressure? The ongoing trade war with tariffs could certainly continue to weigh on a business like Lululemon. It's not an American company. Again, I want to stress that, but there are spillover effects for these sorts of things. Hopefully that doesn't tarnish Lululemon's image outside of the US. Put it all together, I think at 11 times earnings, even if earnings decline a little bit more from here before management stabilizes things, I think there's a tremendous amount of value, margin of safety in the business. And this is one that is very high on my watch list. I've recently created some exposure to it through options. And I think investors that are looking for value in a high quality business and a very expensive, volatile market, you may want to put Lululemon on your list.